All right, what's the vibes, family? How you guys doing? It's another weekend again, so this is going to be a review and also going to be a study session, right? So first things first, right? Drop everything you're doing, pause the video right now, and go and get a journal and a pen. You're going to learn something that 90% of traders do not know about, and I'm going to be uploading that in the next 20 minutes, right? That's the first thing we're going to do. And then we're also going to go back to look at exactly how the week has been and see how we can also attack the new week. There's going to be market outlook tomorrow where I will do a little bit more of that, right? But on this video, I want to talk about something very important that actually allows you figure out what exactly do I do when major news releases come out, right? Major news releases, specifically, we're going to be talking about NFP and CPI in today's video, right? And you might have wondered, yes, this red folder comes out. We see these spikes when they come out, but what exactly is really happening? Like, what exactly do I have an understanding? And I will tell you, right, for so many years, this is me 6 years in trading, right? And for so many years, I just looked at the news release as okay, volatility injection coming in, price is going to print or push into higher time frame levels or drawn liquidities, which is not a lie, right? But there's something deeper. There's a deeper understanding, to what these news releases mean. And I'm going to be taking it bit by bit, right? As I also wish to start to help you see how fundamental analysis is actually a very key factor in being precise with your analysis, right? I know you've only just heard a little bit about fundamentals and people don't speak about it too much, and the truth is that it's not their fault. They actually do not know. Nobody's actually really talking about things like this, right? If you think about the markets that we trade, they are not controlled by speculation alone, right? A large part of it, yes, a bit of it is controlled by speculation. But if you think about the USD, we have policies that actually control strength and weakness, which is bullish or bearishness in these asset classes, right? And if the USD has, or the dollar, if it has an 88% involvement in all of the currencies and all of the asset classes that we deal with, because it's the king of the market, basically, then we need to start to understand how these policies affect price. Right. So again, like I said, we're going to be looking at CPI and we're going to look at NFP. What do they mean and how can they affect the dollar? How can they affect the stock market, NASDAQ, SP 500 and all of that, right? And how can they affect, commodities like gold, right? So many people are trading gold right now. So I thought that this would be good information, right? So again, if you're going to want to stick around, this is when you lock in. Take away every distraction and let's get into it, right? All right. So straight into it, we're going to look at, NFP. What exactly does NFP mean? And I'm going to really be speaking in simple terms like I always do, right? NFP just really means the number of jobs that are added to the US in the past 1 month. So NFP typically is going to come every first Friday of every month, right? As you know, right? Every first Friday of every month. And, it's always everywhere. Everyone is alert, or fearful. There are traders that want to make a whole lot of money because that spike could make them a whole lot of money, 200 pips, 100 pips in 1 minute, right? And there's also, ICT or institutional traders saying, you know what, I'm just going to stay out of this news release, which is somebody like me. I lost my most money trading NFP. So for a very long while, I've just stayed out of trading, NFP because of that scar. But it was because I did not really understand what exactly it meant, right? So again, NFP really just means non-farm payroll, as you know, right? But it means something deeper. It actually means the number of jobs added to the US. And you might ask, what does that mean really? Honestly, what it just really means is if we have more jobs added to the US, right? And I'm going to show you very quickly. If we have more jobs added to the US, we're thinking about, okay, yes, the economy is looking good, right? Strength. So we want to see dollar strength when, we have more jobs added to the US. If we have less job than forecasted added, right, then it means that we could actually be looking towards, rate cuts or, pressure in the US or economic downtime and all that. And that could signify dollar weakness. It's as simple as that. So let me just go into the calendar so that you actually understand what I'm saying. All right. So we had NFP and CPI last week, and which is why I thought about to talk about this because it's going to be important for you to understand this, right? So we had NFP on Wednesday. You might ask, oh, you said NFP happens only first Friday of every month. Well, there was a shutdown last week, a partial shutdown, right, on Friday last week that actually allowed that NFP was pushed into Wednesday, February 11. right? So now, when you look at the NFP tab, right, when you see NFP, many times you just focus here, but I want you to look over to the right, right? When you look over here, what you're going to see is you're going to see forecast here, you're going to see previous, right? So previous just means this is the numbers of jobs that, or the number of jobs that were added on the previous NFP, 48,000 jobs, right? There's always a forecast, right? What the market actually perceives should happen based on, policies that are already going around. This is the forecast. You'd see this and you see this before the numbers actually arrive. At 2:30 our time when it comes in, or 8:30 EST, we would then see the actual numbers being released. So like I said, if we have more numbers than the numbers forecasted, this signifies dollar strength. When we have the dollar as an economic asset, when we have that, when we have the dollar being strengthened, or you can say bullish, right? Gold doesn't like that. Gold thrives in an economy where the dollar is suffering because it's a risk asset, right? So when the dollar is actually experiencing a risk on scenario, which means investments are being pulled from this asset to put into other assets, the assets that money actually flows into would be asset classes like gold, asset classes like, Bitcoin, asset classes like, your foreign currencies. So if we have more jobs added to the US, it means that we are seeing a strengthened economic environment. Do you understand? And that would mean bullishness for dollar. So what will happen, for gold in that scenario? We're going to see lower prices for gold, right? Bearishness for gold. For the stock markets also, we're going to see lower prices. Now, there's a whole lot more that I can go deep into inside of here, but I want you to really understand the basics, right? And if you're going to like, things like this, or if you want fundamental, education like this, just click the thumbs up button on the YouTube right now, so that I can be able to just get, or just make a comment that you would like to see this more, and I'll be able to just do more of this and just go deep into it. This has really changed my trading, tremendously, and I just felt like, what else, right? I can actually share with people that are willing to listen. So if you're gonna like this kind of information, just click the thumbs up button or make a comment right now that you'd like to see this more. I will do more of this, right? But this is the base idea, right? More jobs added, we're going to see what? Strengthen dollar, risk assets, like your foreign assets. Obviously, if we have strengthened dollar, we're going to see GBP USD go lower, Euro USD go lower, like that, like that. But we're going to see majorly commodity assets, precious metals, we're going to see that go lower. We're also going to see what? The stock markets, NASDAQ, SPX, we're also going to see that go lower, because when we're seeing, a strengthened dollar, we're seeing higher yield, right? I want to leave yield for a bit now because we're going to come back into it, right? But this is really the basic idea. So let's go back to, some of the things I wrote down so that we can really just narrow down on that. It's a very simple idea. More jobs added, dollar bullish, less job added than the forecast, dollar bearish. And we're going to also see it in price, right? So what happens? It tells us, the labor market is strong or weakening. So again, more jobs means strong, less jobs means weakness, right? Is inflation pressure likely to persist, which we're going to see when we get to CPI? And this is the important one, right? Will the Fed stay hawkish or cut rates? So if the Feds are staying hawkish, it really means that they are not trying to cut rates. If the Feds cut rates, very simple idea. I've talked about this a lot also. When we see Feds, or when we see the Fed market or the Fed chair, if we see them cut rates, it signifies lower dollar. If we see the Fed leave the rates the way they are, they're already high, so they don't need to increase it, or increase it, right? It means, a higher dollar. So again, more jobs means that the Feds are likely not to cut rates. That's just what it means. Less job would mean that, oh, okay, the Feds will be looking to cut rates because, right, we're not having a good economy, or we're not having an economy that actually makes sense. So rate cuts happens in that environment. Gold, the stock market likes those environments to thrive. They will go higher in those environments. Right. So again, the things that we want to think about is when we see NFP come in, something else comes in: unemployment rate and average hourly earnings. Let me just go back there again. Like I said, it's a study session. Listen properly. You probably need to watch the video like twice to actually get all of this information, or go back and just watch it again. Pause if you don't understand and check properly. Listen properly. You're going to get it right. The next thing that happens here on NFP, it's not just non-farm payroll that is happening, or non-farm employment change that's happening. There's also average hourly earnings. So average hourly earnings, this is M over M. It means month over month, right? So the average hourly earnings, right? Again, the forecast was 0.3%. Then what came in was 0.4%, meaning that we had a better average hourly earning than the past month, even the forecasted one for this month. So the past month was 0.1%, and now we have 0.4%. This is showing that the economy is looking good. Do you understand? Right? We also have unemployment rates. Unemployment rate is telling you how many percent, or how many percent of unemployment was recorded in the last month. So we had for the forecast, or last month, we had 4.4% recorded, right? And for the forecast, we're also expecting 4.4% of unemployment coming into, play. But what did we have as the actual forecast? 4.3%. So unemployment rates came in lower than the forecast and also the last month. What does this mean again? It means that we have what? We have a strength in the economy. We have a bullish dollar. So this is why when NFP happened on Wednesday, what happened with the dollar? You can guess already. You can guess exactly what happened to the dollar when NFP came in, just based on this information that I gave you, right? But let's go there so that we see. So NFP happened on Wednesday, right? Let's go into lower time frame. All right. All right, so that was Wednesday, right? So as you can see, you can obviously see the obvious spike, right? What did NFP come as on Friday, right? It comes in higher, right? Dollar runs higher, and what will happen to risk assets? Gold is going to go lower, DXY is going to go higher, GU, EU, they will just do opposite of what the dollar is going to do. So do you get the idea of this? Now, you would start to understand why on Monday on the Outlook, right, I started to talk about why I wanted to see sell side for the foreign currencies and bullish dollar, because the forecast was already saying we would have, or we could have, a higher jobs market, for this NFP, right? Meaning that we could have strengthened dollar coming in for NFP. And I was leaning onto the side there. I said it on Monday that, based on fundamental analysis is why I want to see continuation for buy side on the dollar, which is what we saw. If you look at it through the week, it was a consolidating dollar at the end of the day, and I'm going to show you why. Just look at it. Like I had some things here also, right? But let's take up this. We already have, something better to look at. Right, but we see Wednesday expands higher, right, based on the information that we have. So just keep that in mind, and you can start to use that to understand how price actually works. So if we look at gold on Wednesday, right, if we look at gold on Wednesday, what are we going to find? Right, this is Wednesday for gold when CPI dropped. Sorry, did I say CPI? When NFP dropped, this is gold here, right? And I think this is 830 here. All right, all right. I think this is 830 here, and you can see the dollar goes higher. What happens to gold? Gold spikes lower, right? And this was also the reason why I was looking for sales going into Thursday. Yes, I did not catch all of this big move, but I gave out a trade on the Discord. If you're not on the Discord, the description, a link will be in the description below, so you can actually join there. I actually put out my trades there and just give, valid breakdowns. I talk about, what to invest in, how to invest, and all those things, trading information basically. So you would see, a link below this, below in the description below, so you can actually join that, right? So, but this is exactly the idea. If the dollar is going to go higher, what will happen to risk assets? They will fall off. And as you can see, gold running lower, right? Also, the stock markets, which we've talked about, right? NAS also on Wednesday, what do you expect will happen? Would expand lower. So as you can see, NAS also expands lower for NFP and continues going into Thursday. Right, but that's one part of the story that we want to talk about. The second part is CPI. What is CPI? Basically, just look for the I there and just think inflation, right? CPI is telling you what the inflation rate is. Is inflation coming in hot, or is inflation coming in cool? Are we having a higher inflation, or we are having a lower or a cool inflation? Right? And it's simple like this. When we have a higher inflation, this signifies that the feds are not willing to cut rates. Remember, when the Fed cuts rates, we're looking at a bearish dollar, and we're looking for what? Higher foreign assets. Gold will go higher, stocks will go higher, your foreign currencies will go higher also. So if CPI comes in hot, which means if the forecast is this particular percentage, let's say 2.5%, and CPI comes in at 2.7%, it means that we have a hot inflation. Hot inflation means what? We're going to see what? Lower gold, lower stock market, lower NASDAQ, lower SPX, lower foreign currencies. If CPI comes in cool, which means if we have the CPI forecast at 2.5%, like we said already, right? And the actual number is coming in at probably 2.3% or 2.4%. It means we have a cooler CPI or cooler inflation rate, and that means that it's very likely that the Feds are going to cut rates. And what does that mean for the dollar? Bearish dollar. It's as simple as this. So as you can see, right, what you don't know can really just kill you because you don't know it, right? And what you know can actually make you better than where you are right now. So information, right, can actually change your situation. So think about it, right? What did we have on Friday? We had CPI coming in for the US dollar. I like to pay attention to the dollar news because, again, like I said, it has the highest involvement in terms of, all asset class as we trade in the marketplace. It's the king of the market. So to be able to trade any marketplace properly, you need to understand what the dollar is really doing. All right. So CPI is playing out. And what did we have, right, for last CPI? Month over month, we had 0.3% for the forecast, right? What did CPI come in as? It came in lower than the forecast. It came in lower than the forecast, and that means what? Cooler inflation, which means that we can actually have a what? We can actually have a rate cut from the Fed, which means also lower dollar. So this is kind of like a contrast where we have on Wednesday, everything is good with the dollar. We're seeing strong dollar, strengthening dollar. And for CPI, we're seeing CPI numbers come lower. CPI year over year also, forecast was 2.5%, and the actual news release came out as 2.4%. So this also means we're seeing cooler inflation. Cooler inflation, again, very simple terms, means lower dollar. Again, like I said, if you're going to like information like this, or if you want me to go deeper inside of this and actually just explain all of the scenarios, about 4 scenarios for CPI and NFP that you can actually hold on to, that actually improves how you actually read price, just drop a comment right now and I'm going to go over this. Like I said, if you understand what actually moves price, which is not just, bullish order blocks and bearish order blocks and breakers and all of that, right? Fundamentally, there are policies that actually control how price moves long term. You're actually going to be on side most of the time than not. Do you understand? So again, as we can see, we saw bearish dollar for CPI, right? And we saw bullish dollar for NFP. So that's kind of a contrast, which actually ties things together. You can probably guess what that means. Consolidation, right? The moment we cannot tell the directional bias, if it's bullish or bearish in any specific given time, we can actually expect a consolidation. It's the hardest type of it's the hardest behavior of the markets to actually understand. But this is exactly what it means. We had bullish Wednesday, we had bearish Wednesday for the US dollar. And we're just going to go back and actually see how this information actually ties together. And the way I teach, as I want you to put on a skeptic cap, right? So that's why I'm going to show you the examples that happen in this particular NFP and CPI. And I want you to use this information and go back to the last CPI. That's how I know you're going to do the work. That's how I know you're going to be great, because you're going to go back and actually check if this actually works. And you're going to see for yourself that, oh, if I had this information looking at the past CPI and NFP, I would actually have a better chance at making my speculation and a higher probability to making money in the marketplace, which is what we're here to help you to do. All right. So again, this is it. CPI hot, meaning coming higher than the forecast. I'm going to see gold, USD, the dollar go higher. I'm going to see the stock markets go lower. I'm going to see gold go lower. Right? If CPI is coming in cool, I'm going to see USD go lower. I'm going to see gold go higher. I'm going to see stocks go higher. As we can see, we saw the CPI coming in cooler. So that means that the Feds are more likely to cut rates. When do we understand the Fed's cutting rates? That is what? That is FOMC. FOMC is when the rate cuts are actually announced. So these are the factors that actually control or that actually tie in to how we actually view these things. And it's so important to actually understand them right off the bat. Right. So again, we saw that if we were going to do something on Friday, after the news release played out at 8:30, right, and you understood this information that I just told you, what will you be doing on the stock market? You'll be buying. What will you be doing on gold? You'll be buying, obviously, because what? CPI, the inflation came in cooler for the USD, which means lower dollar, higher foreign assets. Higher foreign assets. And it's that simple, right? So if you look at gold on Friday, what happened on gold on Friday? We saw the market expand into buy side. This is Friday, expand into buy side. And what did the dollar do? You can obviously guess. If CPI came in cool, we're going to do what? See lower dollar, right? And we're going to see higher foreign assets. If CPI came in hot, meaning higher than, the forecast, then we're going to see what? Higher dollar, and we're going to see lower foreign assets. So look at what happened on the release. The release, we spiked lower, we ran higher again to take our buy side liquidity, and the actual, true move of the day was what? Sell side. Now, if we start to tie this into, some of the things that we've talked about on this channel, Asia's high to Asia's low, you can start to understand how all of these things just fit in and they just lock in perfectly. What you want to do as a trader is to be able to get information on your hands that actually make you make good decisions, right? And sometimes you might not be lacking, patience or discipline as you think. You probably do not just have a lot more information on your hands to make a proper educated guess. We actually make guesses here, but educated ones. And the more you can know, it's kind of like as you start to peel in and you start to understand the information within, you can actually make better decisions. And this is actually good because it doesn't just control what happens on that particular day, right? Understanding information like this can actually just push you and allow you stay on the right side of price, even as a day trader, more times than not. Again, as a day trader, you probably think you need to be changing directional bias every single time. But when you understand what the fundamentals are talking about, you can actually understand for a while that, oh, month over month, I can understand that the dollar is actually bearish based on this information. And I'm just going to look for buys on foreign assets. And this is why I'm bringing out this information. All right. So again, if you like information like this, I'm saying this because, not so many people are so interested in fundamentals. Everybody just wants to talk about what other blocks are and what breakers are. But I'm going to ask you, what has that done for you over time? What has that done? What has that done for you over time? Right? I use other blocks. I have strategies. I have systems that I've even taught for free here. But I have understood that to actually be able to hack exactly how to be, on the right side, especially in this time of volatility, you need to understand what these policies are saying because they actually control price for real, for real. Right? All right, guys. I said I was going to do a review at the beginning of this video, but we've actually used, a lot more time that I plan to use. So I'm going to do the review in another video. I'm just going to just leave it up until tomorrow where we actually talk more on what we're expecting for the week. Right now, the dollar is really still consolidating. We're seeing gold also just dancing, and even the stock market. The stock market is falling off. And I really believe that the stock market is falling off based on investors being scared about this AI bubble, right? Companies are going out to actually just buy and spend money on AI, right? And when they spend money like that, they are doing it off of debt, right? And investors are not really calm with that idea. This is really just my own intuition based on the things that I've looked at and studied and just heard, right? So this is why we can see, the stock markets really just fall lower, right? And maybe later in the year we can also see, price run higher. We had a very good year last year, right? And based on seasonalities also, when we have a good year with the stock markets, right, the next year is really not that interesting, right? So all of that is also to think about. If you also look at the stock markets, February going into April, you'll see a downward decline, right? So all of these things, right, you can expect. And as you've heard over time, I've talked about how I want to see US 30, NAS, XPX, I want to see them roll over to the downside, and we're already seeing those falls coming, right? So again, the Telegram channel is going to be linked down below. That's where the market outlook is going to be holding tomorrow. And also, if you want to see my trades for the week, then click the link to the Discord channel. Go in. I don't offer any mentorship, group mentorship for right now. I only offer private mentorships one-on-one. So if you're up for that, reach out to me privately, IG at Yinka_me. and we can work something out. But for right now, I'm giving all of the information free to everyone that is really listening. All right, somewhere in April we're going to come back into having the inner circle back, right? But more information is going to come out on that. So if you have enjoyed this video, let me see your comments. If you like what you've heard, if you like to hear more about fundamentals and how they affect price, and I'll be willing to show you more of that. But I want to see that you're really interested in that, and I can share more. All right, guys, I hope you learned something from this one, and I would see you in the next video. Bless up, family.